Okay, hey guys, today I'm here with Clint Hobson with Nexa Lending, and we're going to talk about the home buying process. So, looking forward to sharing what the process is and what do you need to do and how to start. So, thank you for being here, Clint.
Yeah, glad to.
All right, can you tell us about the buying process?
Yeah, especially with first-time buyers, I
Hmm.
really just like to sit down with them, kind of figure out what their goals are, and time frame. Maybe a lot of first-time buyers are renting apartments, so we want to kind of line it up with their lease ending, so that they don't end up with a house payment and a lease payment.
Hmm.
But the first thing I do is just have them fill out a loan application. Loan application is your basic name, address, social, where you live, where you work, kind of information.
Hmm.
And then I'll ask them for basic income and asset documents, W-2s, pay stubs, bank accounts, statements, just so we can figure out what they qualify for.
Hmm.
Once I have all that, which most applicants can fill those out in less than 20 minutes. And once I have that, I pull credit, and just from there, I can figure out what program would be best for them. Most people end up doing an FHA loan or a conventional loan, um, but depending on the type of income they have, there's different programs that are outside the box
Hmm.
for people. But once we, even within like an FHA, we may need to figure out, do they have 3.5% down payment, or do they need down payment assistance, which ends up being 100% financing
Hmm.
for them. So we just kind of, look at their whole profile and figure out what's going to be the best program for them.
Okay, good.
Yeah.
I do have some questions that came to mind, when I talk to buyers. One of the ones that I see a lot is some people are afraid to have their credit run. So what do you think about that?
I get that a lot
Yeah.
as well. And I think what people don't realize, because they'll ask me, do you do a hard pull or a
Mhm.
soft pull?
Mhm.
And I do a hard pull. I can do soft pulls, but the reason I do hard pulls is they're the most accurate. A soft pull is not always an accurate score. It does tell you generally where their credit is, but especially if we're really trying to make an offer on a house or something, we have to do a hard pull and know exactly what our credit score is.
Mhm.
But also, I tell them they're allowed um, a couple credit pulls a year without any adverse effect. Credit companies have to allow people to shop for a mortgage, and I believe it's four. I have to check that to make sure, but I believe you're allowed four credit checks without any hurt to your credit score or adverse effect. And
Okay.
so that's the thing I tell them the most, to put them at ease.
Yeah, and it's just better to know before ahead of time, once before they find that house and they
Hmm.
fall in love. Okay,
Right.
good.
Because if there's an issue too,
Yeah.
we want to figure out what that issue. Maybe they have a collection or something
Mhm.
they didn't even know about. We want to find out early and take care of it.
Yeah. Yeah, good. Okay. And then about down payment, what do you see? What do buyers have to bring?
So if they're going to do an FHA loan, or even a first-time conventional loan, FHA is 3.5% down. Conventional is 3% down for first-time buyer.
Hmm.
However, especially here in Texas, we have some state agencies that provide the down payment, whether through grants or what we call a silent second, which is technically a loan,
Hmm.
but it only exists for 3 years. As long as they stay in that house and keep that loan for 3 years, it disappears, and it is just free money.
Yeah.
So they're great state programs.
Okay, good. Um, some people also ask if about the USDA. What?
Yeah, USDA. So the way USDA works is it is 100%
Mm-hmm.
financing. They have stricter debt to income than FHA or conventional. And when I say debt to income, what I mean is taking what their gross income is and what their house and other bills are. With FHA, the debt to income can be up to 55%. So if you make 5,000, your total obligations can be a little over 2,500. Conventional is 50%. So
Mm-hmm.
if you make 5,000 total, you can have your obligations can be up to 2,500. At USDA, the housing portion of that has to be less than 28.
Mm.
So, whereas FHA and conventional can be in the 40s,
Oh, okay.
USDA can only be, it's 28 or 29. I think it's 29
Mm-hmm.
actually. But your total obligations, your house, your car, your credit cards, and everything, I think has to be 41. So 29 and 41, whereas conventional and FHA are a lot higher.
Mm.
That's the biggest, not problem, but that's the biggest challenge
Yeah,
with
with
USDA loans.
Okay, so but it's an option
Yeah.
for people that want
Yes, it is.
100%
Yeah.
also.
And if they qualify, it's a great loan. Same thing with VA. If you're a veteran and you have VA benefits, it's 100% financing.
Mm-hmm. Yeah. And what about credit score? What is something that people need to work for?
Yeah, so FHA, first time buyers, you're looking at 580 if you have the 3.5% down. If you were looking to do one of the down payment assistance programs, they want 620 credit score. And when I say credit score, what we do is we pull all three bureaus. So, and then it doesn't matter what order they're in, we go off the middle score. So if I pull your credit and you have a 600, a 610, and a 620, to me, it doesn't matter which bureau it is, your score is 610. And that's how we look at it.
Okay. For people that need help with their credit, what do you suggest? That they reach out to a credit repair, reach out to you? What should they do?
Yeah, sometimes it depends. So it's, I've been doing this for so long, sometimes I can just tell them. Sometimes their credit score is only low because they have very clean credit. They don't have any delinquencies or anything, no derogatories, no charge-offs or anything. But maybe they just have their credit cards maxed out. Maybe they only have a $500 limit and they've got 400 and something on it. And I just tell them, oh, just pay that down to under $100 and your credit score is going to go up. Sometimes it's something simple like that. But if I do have someone that has, some charge-offs or some delinquencies, and it's a little harder, I do refer them to a great credit guy that I use. Mostly because it's just going to take a little more time and a little more expertise because especially something like an FHA loan, let's say you've got, people go through divorces or whatever and you end up with some rough credit, some of it doesn't matter, to be honest. So I will get them with a credit expert that says, hey, only pay these three because these are the only three that are going to make a difference. The others don't matter. So.
Okay, all right, sounds good. I've heard about pre-qualified and pre-approved. So can you tell us what is the difference between that?
Yeah, so pre-qualified, well, honestly, they get used interchangeably. Okay? Yeah. So, some people will. I've even had letters that say at the top, this person is pre-qualified, and at the bottom it says they are pre-approved on the same letter. So. But essentially what pre-qualified means is we know about what they look like. We know about what they make. We know what their credit score is. We know about how much they have in the bank, but we haven't verified maybe everything.
Oh, okay.
Pre-approved is we have it all. I've got the bank statements. I've got the pay stubs. I've got the W-2s. I've run them through the automated underwriting system. They're pre-approved.
Okay.
And that's really all I do. Now, I use pre-qualified as much as anybody else, just because that's the term that people use more often. But for me, when I do a application, I will not send out a letter to a realtor or whoever until I have verified all these things, because it's not that I don't trust them; it's that I don't trust anybody.
Yeah.
Right? Because if I don't expect a borrower to know how to calculate income. If I call someone and I say, hey, how much do you make? And they say, oh, I make $2,500 a month. Well, they may mean after taxes.
Oh, yes.
I deposit $2,500 a month, but that's not what I go off of. I go off their gross. Oh, you don't make $2,500. You actually make $3,100. Well, that makes a big difference in the debt to income. So I make sure I get all their documents up front so that I can verify what they actually make and how much money they have in the bank.
Okay, so pre-approval is going to be a stronger for them to have with them. You talked a little bit about applying. What documents are needed for someone when they start the application?
Yeah, the things I ask for the most are your simple income and assets. So W-2s, pay stubs, um, checking savings, whatever, wherever their down payment is coming from.
Mm-hmm.
Maybe they're doing, pulling it out of an investment or something. I just need to know what it's coming out of so that I can verify it.
Okay.
And then ID. Um,
Mm-hmm.
and if they're, permanent resident alien or whatever, just making sure I have the right um, IDs as well.
IDs. Okay. All right. What do you see the process from when people apply to closing? How long does that usually take?
I always tell people 30 days. So
Mm-hmm.
by the time you take them out, you show them a house, you guys make the offer. From the time you get a signed contract to closing, 30 days is safe. But if you've got a really strong client and they're organized
Mm-hmm.
and they give me all their documents up front like they're supposed to, then you can close in 2.5, 3 weeks.
Oh, that's good.
So just
Yeah.
depending on the type of loan
Mm-hmm.
and which lender we're using. I
Yeah.
have hundreds of lenders. I don't use all of them, but
Mm-hmm.
I have a handful that I like, and if it fits the right lender and they have the a good rate for that client, there's some lenders that quite frankly are just a lot faster than others.
Okay. All right. Sounds good. And I guess, and then the last question for you suggest to people, what would be the first thing for a home buyer, that first time home buyer to do, to reach out to do to start?
Yeah, to both of us,
Mm-hmm.
either one of us, and because we do want to do that application first.
Mm-hmm.
Until we know exactly what their income, assets, and credit are, we neither one of us know what they can qualify for. And that's also, as you know, important. If I call you and say, "Hey, they have down payment money, but they don't have enough in the bank for down payment and closing costs,"
Mm-hmm.
one or the other. And so, you knowing that, when you go to negotiate for them, you're either going to get the seller to pay closing costs, or we're going to have to figure out, how to use their money the best way we can
Yeah.
to make the deal work all the way around.
Yeah.
So,
Okay. Well, sounds good.
yeah,
Well, thank you so much for your
yeah,
time.
sure.
And please follow, like, comment. And if you like this, we'll make more. Thank
All
you.
right. Thanks.